Good afternoon, everyone. My name is Matebe Chisiza. I am the Regional Director with the African Venture Philanthropy Alliance. I am based in Johannesburg, South Africa, and again, covering Southern Africa. It's a pleasure to welcome all of you here today for this exciting discussion on gender smart, gender lens investing and how we can collaborate to unlock capital for sustainable impact across Africa and also across the world. And with that being said, I would like to also welcome my team. Thanks so much. If you would quickly share the screen so we can get the presentation going. As mentioned, I work with the AVPA, as we call it, or the African Venture Philanthropy Alliance. Next slide. And what we do, colleagues, is we work to mobilize capital along its continuum, so grants, debt, equity, for social impact in addressing the financing gap of the Sustainable Development Goals. These are some of our sister networks in Africa, and we'll also be sharing the slides, so don't worry too much if I'm going past. Next slide. We are a Pan-African organization headquartered in Nairobi, Kenya, and these are our regional offices also in Lagos, Nigeria, for West Africa, and we are also looking into opening in North and Francophone. Next slide. So how do we mobilize capital towards social impact? Well, we are a member-based network of social investors. So we do this in a number of ways through knowledge sharing, capacity building, deal matchmaking, as well as ecosystem building, which is part of like a convening today. Next slide. I'll just also like to talk about our impact conference we have at the end of the year. Next slide. And we'll also be sharing this information as mentioned in the chat. So last year at this conference, next slide, we launched what is known as the Africa Social Impact Exchange, as well as our catalytic pooled fund. So today we're talking about gender smart investing, right? So how do we also drive catalytic capital through these mechanisms? This is one of the mechanisms that AVPA uses. Next slide. And if you would like to know more about this, next slide. We do, again, as mentioned, have a regional team. And please get in touch. We'll be sharing colleagues' email addresses in the chat for our regional leads. Please do jot them down. Next slide. So you may be wondering, what type of members of social investors do we work with, right? These are just some of our partners at a quick glance. Next slide, but also available on our website. So please do visit it. Thank you so much. And without further ado, I just wanted to go through some housekeeping rules so that we can ensure to have a smooth conversation for today. So just take a moment to see the screen. And for some of you who are just joining, the session is being recorded. Next slide. As mentioned, next slide, we will be sharing our contact details of the regional leads. And for the time being, this is also, you can take a screenshot for ease of access, but it will also be popped in the chat. Okay, thank you very much. And let's get the conversation going. Once again, thank you for joining us today. And on behalf of the African Venture Philanthropy Alliance, I would just like to welcome you to today's discussion on gender smart investing and how we can work together to unlock capital for sustainable impact. So gender smart investing, I know sounds like a buzzword, right? Everyone is using it. Gender lens investing, they've been impact reports. Well, I see them being released every other, week, month, year, which is really great to also see this push within the ecosystem. But I want us to remember it is more than a buzzword. It is a social imperative, colleagues. When women entrepreneurs and social investors drive gender diverse businesses and also include access to catalytic capital, economies grow, communities thrive, and social impact scales. Yet, despite the overwhelming evidence, women-led businesses, fund managers, entrepreneurs continue to receive only a fraction of global investment. And according to research from UNICEF's Venture Fund, it calculated last year in 2024 that women-founded companies globally received only 4% of investment capital. This is an astounding figure, which really shocked me. A further rather analysis of the fund's data highlights the positive returns or financial returns specifically of social impact gender smart investing. So it's not just a smart business decision at this point, it's smart economics. And we're in the business of smart economics. And to just give you some pointers and some statistics around this, in Africa, women-owned SMEs make up nearly 40% of businesses, but they receive less than 10% of commercial financing. And these are just the formalized economies. And I want us to remember in Africa, there's also a big, big informal economy, as we know, which is also driven in a large part by women. When social investors integrate a gender lens, they often see both financial success as well as measurable impact. These are just not words I'm telling you, colleagues. These are facts. These are statistics. This has been proven. So what does this mean? It means that gender smart investing is not a compromise. It is about unlocking untapped potential for sustainable success. So today, I would like to talk also about collaboration. No single player can close this gap alone. We need a collective effort, and which is why we see our diverse audience here today. We need private sector investors, foundations, grant makers, governments and policy workers, social investors, SDG advocates, entrepreneurs across the continuum, colleagues. And today's conversation is about moving theory into action. As mentioned, I am an avid report reader myself, but at the same time, I think it's time to move beyond these reports. How can we take these excellent strategies into the real world? So I would like to also introduce our expert panel in order to explore this and actively shape a gender-smart investing, not just narrative, but directive in Africa. First of all, we have Lelemba Piri. She is the partner. Hi, Lelemba, if you can just do a wave.
Hey.
Hello. She is the partner and co-founder at HEG Samata. She is a seasoned gender lens investor, a development finance expert with over 20 years of experience across 10 African markets. She drives investments in women-led and gender-diverse teams across Southern and East Africa. Previously, she led Zona in Zambia and Malawi as regional MD and oversaw over 5,000 people, as well as managed assets across multiple African markets. We also have Kate Perkins. Hi, Kate.
Hi all.
Hello. Kate is the interim head of the Gender and Diversity Finance at the British International Investment, PLC, where she drives gender lens investing across Africa and South Asia. With over a decade of experience at BII, she has played a pivotal role in equity investments, strategy, and portfolio management for financial institutions. She also serves on the board of Advance and HBL Microfinance Bank Limited, and is an investment committee member at FSD Africa. Welcome, Kate. Next, we have Monica. Hi, Monica.
Hello.
Hello. Monica is the CEO of Java Foods, a corporate lawyer, seasoned corporate lawyer, and turned entrepreneur who has also built Easy Noodles into a leading brand across Zambia, Zimbabwe, and Tanzania. She's also the first woman chair of Airtel Network Zambia and Zambian Breweries PLC, and serves on the advisory board of the African Development Bank's Affirmative Finance Action for Women in Africa, tackling financing gap for women entrepreneurs. Welcome, Monica. And last but definitely not least, we have Jenny Chamberlain. Hi, Jenny. Hi, she is the founder and partner at Altri Capital, which is a leading climate fund as well, not only in the region, but on the continent. She is also leading the Altri Kadzi, Gender Climate Fund, which backs women-led climate smart businesses in sub-Saharan Africa. She has been named Africa Asset Management Power 50 Top 10 and previously the Africa Opportunities Fund. With leadership roles at HSBC in New York and London, she brings a deep expertise in investment, gender smart capital, and sustainable finance. Welcome to our panelists, welcome to our audience. You can see we're set to have a really expert conversation here today. And I'd like to set the scene and start with you, Lelemba. A common challenge, Lilemba, that we've often heard in the discourse is around gender lens investing is proving to be the financial, or is proving rather the financial case to investors. Why should they do this? Why do they need to take this on? From your experience as a gender lens investor, what data or success stories have helped shift the mindsets and bring more capital into this space in Africa? And just to let you know, colleague, sorry, Lilemba, before you come in, please do pop any questions you may have for her. We can take them on after her presentation. Thank you, Lilemba.
Great. Thank you so much for having me. This is always an exciting conversation to be part of, and hello to the rest of my colleagues. So I think nothing beats evidence, right, when it comes to proving the case, because the data is there. There's report after report after report, as you've rightly put it. But what we're starting to see is that as we collect more evidence within our own funds, it creates a lot more excitement from the larger landscape. So when we're investing with a gender lens, for us, this means that we're investing in women-led, women-owned businesses, but also gender diverse teams. And so if it is a male-owned business, we want to see that we have women in the management roles outside of administration and HR, which tend to be the positions where women get put in as a token. We want to see them running in strategic roles that help to drive the growth of the business. And so we are usually the first institutional investor in these businesses. We're doing ticket sizes of $250 to $1 million as the first ticket size. This is the second fund that we are managing. And so we've got evidence from our first fund. One of our most exciting stories is that we're typically investing at the stage where the business is doing anywhere around $50,000 to $150,000 of annualized revenue every year. Our aim is that we support these businesses to grow from that phase to hitting $1 million within the first 24 to 36 months. This sounds ambitious, but this is the time that we're running with, because we do have to prove these cases and to prove that these are businesses that were just needing capital and that had strong business propositions, have strong market demand, and that they can get to these phases. And so there's several of these in our portfolio. And one example is Ishandi. I will put the website in the chat. We met her when she was doing about $90,000 of revenue. She had a clear strategy. She had a solid team and people in the wings that she was waiting to hire should she get the investment. And really, it takes these three things. I'm an entrepreneur turned investor. And at any given stage, if the strategy is great, you've got good people, and you add money onto that table, you lessen the possibility of having execution failures, because the plan is clear and all you need is to put money on the table. So she was doing $90,000 when we met her. Her strategy was clear. She had a good team waiting in the wings. And within a year, she grew that from $90,000 to $1 million. In the following year, from $1 million to $4 million, and in the following year, from $4 million to $12 million. And so the opportunities are there. The demand in the market is there. And it's really about how do we create more and more, actual cases of showing the investors. Our overall portfolio for the first fund is running at 3 times multiple on the money invested. So this is to say, if we invested $10 million, right now the valuation of the businesses we've invested in is running at 3 times that much. And so all of these cases are there. And so what we see is that, that is less of the hurdle now. And it feels like the goalpost keeps moving, and it's now about, oh, how do we exit from these businesses? We're like, oh, first we needed evidence, and now we want exits. So it feels like it's always the target is shifting and shifting and shifting. But from an evidence point of view, I do not believe, like, in this day and age, people can't find the reports, because we are inundated with the proof. And it's about telling more of these success stories, I guess, to help it be a lot more accessible and a lot more real for many people. Yeah.
Thank you, Lelemba. And speaking of accessibility, before moving on to the next question, how do you as a gender lens investor reach the demand side? You know, what tangible steps do you use? Or as you said, there's enough of the demand side that there's a lot of outreach to you.
Well, there's a lot of outreach to us now. So our pipeline is overflowing. Our pipeline is overflowing, and we honestly can't fundraise fast enough to meet the demand. We are quite structured in how we develop our pipeline, and so we work with a network of accelerators and incubators from both regions, from both the South and the East. We run an open call 3 times a year that is always oversubscribed. So we get on average 1,000+ applications, and mostly in each of these calls, we can only invest in 1 or 2. So we're getting the cream of the crop, which means it doesn't mean that these other businesses are not great. It just means that we just have so much demand and just not enough capital to deploy. And then we've also partnered with a practical business school that is taking entrepreneurs through very practical education to see some of the participants that are coming out of those programs, looking at their business cases, because by the time they're done with the programs, they're running a business already. And so for us, that structure has helped us to have access to really entrepreneurs who are already within our networks, but also just reach across. Like the open calls, we get people we don't know, right? Because we advertise this quite widely. And this is important, because otherwise, if we keep fishing in the same pond, we'll keep getting the same fish, and we're not going to get to the women that are really needing this capital.
Thank you. Absolutely. And I think you talked a little bit about the exit aspect, and I just wanted you to expand on that a bit. You know, we've heard that investors apply a gender lens or have a gender smart strategy, but it often stops, and in my experience, it often stops with women-led businesses. So as an investor, what does it actually mean to take a gender smart approach across the full investment process? So from deal sourcing to exits. Can you share an example around this?
Yeah, that's a great question. So when you are investing with the gender smart approach, it is really thinking through the full cycle of how and where are we getting the businesses from. So diversifying your pool as much as possible. The unfortunate thing about investing is it's very network driven, right? So somebody like me is easily going to find somebody like Monica, but might have a harder time finding somebody like Jenny, right? Monica and I are both from Zambia. We will share networks. I'm going to find her easily. So how do we expand on our pools, first of all, to make sure they're as open as possible to get many people and as high diversity as we can? And so through this assessment, for example, when we're getting our pipeline in, we're trying to see who's in the team, how diverse is the team, who are they selling the products to, making sure these products are accessible to women, who is in the value chain that they're creating. For example, we also invest in fast-moving consumer groups that tend to impact other smaller businesses. But what are those businesses, and who is owning those businesses, and who is the employee base as well? So what we try to avoid is what is called pink washing, right? Where a company can easily tell you, we've got over 50% women, but they're all in the call center. And there's nobody in management, and there's definitely nobody in the executive team or on the board. In this day and age, that's just actually not acceptable. And so digging a little bit deeper. We also do things like, if this year we've seen that there is 40% of women in management, and next year it's still 40%, we want to see if it's the same 40%. Because if they keep changing, there might be something within the policies that's not good for women, and that's not welcoming of women. And so going a little bit deeper beyond that. And for a lot of the companies, we do a DEI plan for going forward post-investment. How do they improve some of their metrics, particularly where they're weak? And we support them to really ingrain DEI principles within the culture, so that as the company scales, this is something that is more normal and natural to them, and it's no longer an extra effort to be able to do this. At exit, same thing. Part of why we want to make sure that DEI is ingrained in the culture is that it's important for us that women also start to get ownership. So even if maybe at the beginning they were just managers, is there an employee pool, share capital pool, right, that they can tap into, so that if there is ever an exit with this business, it's not just the founders that are benefiting, but also the wider team, because this is how we create the next investors as well. I came from the entrepreneurial background. I exited with some money, and that's how I got into the investor space. So how do we keep pushing the agenda that ownership becomes part of the plan in this process, so that when we're exiting, more people are benefit from the exit and not just the founders? Yeah. So it's the whole process.
Understood. Thank you for explaining that. And I think it's very important, like you said, to build this capacity throughout the process and not just like right at the beginning and not really understand if this is going to be sustainable. So I think we're happy to hear some of these tangible strategies in ensuring that an investor takes a investee along this process as well, so that we can also, like the purpose of today's, scale impact. And I just wanted to take a moment, colleagues, with that being said, Lilemba has talked about some strategies. So I also wanted to understand some of the expertise, I would say, or understanding in the room around gender lens investing, and see where we're at before we move on to our next speaker, who will be Jenny. So Rachel, Eric, if you can just put a poll. This is just 2 questions. We wanted to understand your organization. What type of organization are you? What are you understanding by gender smart investing? So as AVPA, we can better serve you in this ecosystem. So just take a moment or two to please answer questions. Got about 30 seconds. Thank you, colleagues. And we have some really good mix in the room. And I love when I hear that people don't yet have an experience in gender smart investing. So this is a chance for you not to just gauge that experience, but really let's collaborate, let's mingle in the chat. If you would like to learn more about this community of practice within AVPA, do get in touch. So Lilemba, as mentioned earlier, before moving on really quick to Jenny, we have a question for you in the chat, which says, gender lens investing, it is an imperative, and the data is clear around the need for gender sensitive investments and funding. Are there any thoughts, or do you have any thoughts or studies around family to social or community level dynamics when women-owned businesses are prioritized at a local level? So what are the unintended consequences of women themselves face as a recipient of increased support or mentorship than their male counterparts? So I think other panelists can also think about this question because it may apply to all. Thank you, Lilemba.
Cool. So yes, we are very much aware of both cultural context, and also just like the impact that it has on the family and the rest of the communities. So first of all, at community level, right, it's well documented that women will tend to reinvest back up to 90% of their earnings back into their families and communities, compared to 35% for men. So it's quite a big stark difference. This is something that we've seen in various of our business models, particularly the ones where they might be an agent base. Shifting the agent base from majority men to women, we start to see a higher impact cascading back, both into family outcomes like education for children, access to health for the family, compared to their male counterparts. But secondly, the negative side of that is sometimes you get to see, some gender-based violence incidences coming up, a sense of men feeling less important in the context of development agenda. And this can really cause shifts within that family dynamics. And so for us, it's been very important to be able to offer fit for purpose capital, which means that we realize that it's not equity for everybody. Equity is not going to be the end all and be all for everybody. So how do we give these women options? Because with equity, we want involvement, we want a certain amount of growth, and we can tend to push for growth a little bit harder. For somebody who's trying to balance that juggle at home with a husband that might be feeling a type of way, or a community that might be feeling a type of way, this might not be the fit for purpose capital. And so having options for the women to be able to access maybe revenue-based financing, or even a straight loan where they're very clear that I'll take it at this point, I can exit from this investor at this point, and this is to the extent to which I want to grow my business, and this is enough for me, has been very important for us. So I think having options for the types of capital women can access is important, and also being supportive of the wider dynamics. When we invest, it's not just money and we leave you alone and we don't care about you. We're a strategic partner that wants to be supportive of your holistic journey and your holistic growth. And so we have an executive coach that works with all of our founders in supporting them through these issues. Yeah. She also works with us as the partners as well. So
and that's very important, right? That she's able to work with both sides. And I think you've given some great examples about, how as a social investor, as a gender smart investor, whether you're in corporate, private sector, whether you're a foundation or a development finance institution, you're also able to track not just how much you're investing, but the impact, right? And which leads me to our next speaker, our impact matrix. How are we measuring impact? What are some standardized approaches? So Jenny, I would like you to take us through some of that. Altry Capital has a great impact matrix, which talks about some investments, some partnerships and collaborations that you've worked with in the climate and gender nexus. What are some of the most critical indicators you use to measure both climate resilience and gender empowerment? How do you ensure that these metrics are aligned with the long-term goals of businesses that you collaborate with?
Thank you, Matilda. And thank you so much for coordinating this call, and thanks to the fellow speakers as well, panelists. It's great to be here. So we absolutely agree. So Altry invests with a gender lens and climate smart approach. So quite similar to ATG Samata, we invest across sub-Saharan Africa and take a pragmatic approach to investing. Which means that we will look to invest across the capital structure. So not only providing equity, but looking really to find an instrument that suits the individual company and entrepreneur, as well as our investors' required return profile too. And that also includes duration. So just to talk a little bit to that point, and along Lemba's strategy as well, with regards to exits, some of these businesses, there isn't a clear equity exit. And so we will then look at being able to provide some kind of financing facility to these investors through, to these companies and to these female entrepreneurs via different types of instruments. And so we are very, very keen on the impact that we are trying to derive from these from our investments. And so we actually, when looking at that at the start of assessing our pipeline, we actually do something called an environmental gender equity rapid assessment. And that is really taking a company, it's an online assessment tool where you answer a few questions and it provides a score, which is actually an awesome way of being able to filter as well. Because a little like Lelemba, pipeline is not our problem. It's actually just trying to ascertain who the cream of the crop is. And we wish we had more money to deploy to everybody. It's actually, and that is exactly, it's accessing the funding for these amazing entrepreneurs, because they are the real heroines of our story. So within this, we actually get a scoring spectrum across the gender spectrum, environmental, social, and governance. And each of those areas is provided a score. And that we then use as part of our ranking system to rank a company to see as an objective methodology to kind of rank our company to see if it'll go to the next level and make it through our pipeline for final investment. It's also great baseline metrics for us. So for our reporting for the future, to see how these companies do perform and continue to grow. So we look at all sorts of things. And we also are very big believers that there's no point in reporting data in, data out is kind of garbage in and garbage out. So we're also trying to make our data really meaningful across our portfolio. So we, for every single company, we do, as a part of this environmental gender equity toolkit, we actually have a full assessment which then provides an action plan. So, and that action plan obviously includes DEI in it, how they can ensure that that's the gender inclusivity that they might have today or maybe not, will then match kind of our long-term goals as gender lens investors into the future. And so we actually then put those into our term sheet and into our executed into our final agreements as well, those actual key targets, which is also really important. And so we do take some basic metrics that make sense across a portfolio. So we actually target investing along the 2X criteria, and we're really proud as 2X Challenge members. We're actually one of the first non-DFIs to become a 2X Challenge member. And so those criteria and our companies that fit that we finally invest in need to fit 2 of those criteria. So that's really just very broadly measuring female participation across ownership, or the entrepreneur or the founder is a female. Management, and from there we look at the board, senior and mid-management, and then we look at women as employees, products and services that improve the lives of women and girls, and then women in the supply chain. And so we basically keep that as a very broad, we then look to, those are kind of form the basis of our KPIs for our gender reporting. And then we also have climate reporting, because climate actually impacts women disproportionately to men, as it's been proved, as Matevia reported in many, many different reports. And so climate reporting is really important. We found it actually much more difficult. So we do collect greenhouse gas emission data only to scope 1 and scope 2, because of the size of the company that we're dealing with. But we'll be the first people to put up our hand and go, we're not doing a great job at this. And so we're actually in the process of working with industry experts to create a really easy form of environmental and climate reporting going forward. So we have found that actually some of these requirements for some of the SMEs that we invest in has been quite onerous. And we find that also if we're not the only investor, others have different reporting requirements. And so trying to align those to reduce the reporting burden also on the company, given the size of the investments we're making, so is really important. So yeah, we're trying to automate things as much as possible, keep it online, and ensure that the KPIs that we are reporting on make a huge amount of sense. And a little bit to Lalemba, ensuring that that data is not just pink washing, and that it is actually reflecting the reality on the ground. And the same for greenwashing. And we're not only investing in climate opportunities, but we're also trying to ensure that their sustainability metrics going forward are there. And I'm a big believer that if you don't count it, you don't know what it is. So you need to start reporting on those kind of things.
Thank you so much, Jenny. It's really important what you've mentioned. We need to start reporting. And I wanted to ask you about the scoring metrics that you've mentioned, as well as, KPIs to ensure, or rather to track this impact. Is this accessible publicly?
It is actually. So we use MEDAS, so that's the Mennonite Economic Development Associates, and I can put the link in the chat in a minute. But we use their EGEM toolkit, and that is available. You can all go. Everybody online can go and take that assessment, and you'll get the results. So you'll see that it'll give you 4 different scores for your companies today. And what's exciting is actually, so then we provide a little bit more depth into that. We provide everybody that we screen and a report back, which then also provides ways and for them to improve each of those different metrics.
Excellent, excellent. Please do share that. And I encourage, especially I see we have some banks represented, some corporates. They have such large bases. It would be interesting to see how they score as well on this. And Jenny, we have a question for you in the chat here. Really interesting discussion. Appreciate the gender lens. Is there investment that also includes knowledge building in business, or is it just fund-based investments?
No, it's absolutely knowledge building. So we work with either our team. So we generally do a lot of the implementation of ESG policies and environmental and social monitoring across our portfolio companies. But we also work with a number of industry experts across all industries. We are actually sector agnostic who will assist. But we actually invest across 3 climate verticals, but we're not actually completely tied to them, but those are food systems. So renewable energy and e-mobility. And we've also, the other 40% of our portfolio is in health. And so across all of those different industry verticals, we can provide very specific tailor-made support for the companies in which we invest. And that is really important because I think as women, we often find that we're over-incubated and under-invested. And so it's really important that the companies we invest in get the support that they need to make sure that they grow. And so this is really, so we work with a group called Entrepreneurial Operating Systems, and they actually help ensure that the company has formulated their strategy and are firing off all cylinders to achieve that growth that we all believe that they can achieve from the capital that we're providing. So that is kind of the overall kind of strategy section. And then we work with various partners, industry partners across all metrics, and then the other kind of cross-cutting industry partners on the IT side, because we find that IT really leverages that growth significantly for our underlying portfolio companies.
Absolutely, absolutely. And Jenny, you mentioned climate and gender, and that especially women on the continent are disproportionately impacted by the negative effects of climate change. So I just wanted you to unpack that a little bit. As you lead the Altri Kadzi Gender Climate Fund, working at this intersection, what unique challenges and opportunities have you encountered?
So thanks, Matebe. I think, so you are absolutely right. So there's a number of reports that have been written again about women being disproportionately impacted. But I think for me, the opportunity is that actually we've also seen women as the agents of change. They are the early adopters of climate action, whether it's mitigation or adaptation strategies. So we are seeing women entrepreneurs in the e-mobility space. We've invested in a fantastic company called Huawei Mobility out of Ghana, where she is just covering every single metric of kind of at that mitigation lens, and including healthcare for her riders and full comprehensive insurance for the bikes, and manufacturing now up to 200 e-bikes a month. And so, and each bike comes with a job. And so that is one area where we've seen really women driving that. And then just to take a step back into our food systems, for example, and I'm sure Monica can also attest to this in a minute. But the opportunity there we've seen is that the women farmers, if you distribute kind of drought-resistant seeds, they are definitely the early adopters, where we find a lot more skepticism from men fairly frequently, and kind of they're happy to kind of watch the woman do the experiments and then drive the change. So I think for us, the opportunity for investing in women, and as Lilimba alluded to as well earlier, that women actually drive and build their own ecosystem significantly. So not only their family, but they also reinvest in their communities. And so when they can demonstrate what they do and how actually climate action is making a big difference to their productivity, to their own businesses, that has a huge impact. And so I think that has been really exciting for us to see. So we believe that women are huge benefit multipliers and really need to be targeted and have a seat at every table, in particular this climate conversation.
Thank you, Jenny. And you've touched on something really important, a seat at the table, ensuring that because women are often the early adopters, we need to have these seats at the table, which brings me to our next speaker, Monica. many investors often say, we've heard Lelemba, we've heard Jenny, they've talked about the demand being oversupplied. They've talked about various strategies and impact measurements. But I wanted you to give us a bit of the other side of the view, and please be brutally honest as possible. How can, or rather, from your perspective as an entrepreneur, what do investors get wrong about gender smart or gender lens investing in businesses? What kind of support do you actually need to scale your impact?
First of all, thank you very much for having me and for letting me share my voice. I'm probably the odd one out. I don't run a fund. I actually run a business which I started in 2012 with the mission of actually producing nutritious and affordable foods using locally sourced raw materials here in Zambia. Our flagship product is one of the sort of leading products in Zambia at the moment. But I love the question because I've got to say, when I started my business in 2012, it was really hard to get financing from anybody. I mean, there was no such thing as genderless investing in 2012. It was more like you had to see how you could convince them that this was actually a business and not a hobby as a woman, right? And now what we are seeing definitely is a lot more women taking on business much more seriously, understanding how to scale a business, how to have a customer that pays every time, how to formalize their investments, right? But I got to say, it's still quite difficult. And I think we have to appreciate still that women-run businesses tend to be quite micro. And the difficulty around actually formalizing these businesses, around actually why you must keep a set of accounts, why you must understand where pricing of your product, margin, how you must pay your taxes, things which you as investors probably take very much for granted. But for small businesses run by women, they're just trying to start up, trying to get the business up and running. And they may have a really great idea, but that really needs support in trying to get that business to scale, right? So I do think a few things that come to my mind. First of all, is that there still needs a lot of support needs to be given to women-run businesses on the ground to formalize, to understand how to attract investment, even simple bank loans. I mean, it's still quite a task to get a bank loan here in Zambia or in many African countries. But how can we support them earlier on, understand the process, understand how to formalize their businesses? The second one is around impact. And I love it even for myself. I mean, I have an impact investor. And when we first did the investment, it was very difficult to understand how to report. And I actually used to get quite upset because I was like, I'm just trying to grow the business, trying to pay back what you've given me and really trying to make this work. But I have to go back and count how many people were impacted with respect to this nutritious product. And it became really quite complicated. And it took so much time to really understand how to report on impact. Of course, we're seeing a lot more tools now made available. And actually, what was really great about my investor was they brought support in to us to sit with me and my management team and say, look, we all need to buy into why this is so important. And you need to look at your business differently. How can we support you around your customers? Who do you sell to? Have you thought about who you're selling to? Are you speaking directly to the women? Are the women the ones who are buying the product? How can you do better? And as soon as we saw this, the data that we were collecting and what it meant for the business, we bought into it, right? So I do think investors need to kind of also break it down much better to us as business, what the importance of the impact of sort of gender inclusive strategies, because otherwise it's something which is a little bit too foreign. I mean, they're just trying to survive on a day-to-day. So I do think that now we're seeing a lot more digital tools that help us. But remember, you as investors still have a sort of a hand-holding role so that we have complete buy-in on why the data is important, how it makes us make better decisions, longer-term decisions, simple things. I mean, it's a tick for you guys when you invest to say she has 40% women, but does anybody look long-term about retention? Where are we losing these women? What else can we as the founders, what else should we be doing to attract more women in sectors which are predominantly male, perfect example for me, we sell in the market, and a lot of my customers are retailers run by men. And for the longest time, I actually was very skeptical about hiring female sales representatives. And then we went through some training, and actually I onboarded 2 women, and they've done exceptionally well. It had nothing to do with the fact that they couldn't do the work. It had something to do with my perception that they couldn't do it. And actually we were able to see the data, because when you put them alongside their male colleagues, they were able to sell bigger volumes. But again, it required me stepping back. It required me getting the training to understand the positive impact of these steps in order for me to make a business decision around that. So I think it's all great. I think it's really good to see many more people looking and much more interested in investing in women, in women-run and managed businesses on the continent. But definitely a lot more work needs to be done.
Absolutely, Monica. And first of all, thank you for your vulnerability and the honesty in sharing that, you did not do this approach at first. You yourself were skeptical about hiring. However, through that thought change, through this, how we change also how we act within our own businesses, within our communities, we break down these silos. So we have to see the bias within ourselves as well, and not only take the risk, but just go for it. And Jenny just wanted to touch base on us and add on this, Jenny.
Yeah, thanks, Mateba. I just wanted to say, Monica, that is so correct. And thank you. So lovely to hear from your side. And just a little bit, some suggestion that we found is that the e-mobility company that we invested in, they were really struggling to recruit female engineers. So they had 2 when we first made the investment. And we actually made a suggestion post the GEM full assessment that they put women are encouraged to apply at the bottom of all their job descriptions. Yes. And that was really a game changer. So they've gone from 2 to 11 in 9 months, female electrical and mechanical engineers. So just something that I think corporates everywhere should take into consideration, that often women won't apply for a job unless they're 120% qualified. And actually with that additional encouragement, that could actually be a real game changer for your company.
No, totally. I got to say, I agree with Jenny. Even for ourselves, how we now phrase our job descriptions, we do talk about flexible work. We do, we put a lot more effort into the job description as we write it in order for us to encourage more female applicants. But again, it required somebody to support us in our thinking around this, because we just used to put our job description and say, well, we only got 2 applicants who were women. It was only when we'll say, but actually, if you write it this way, and if you record how many people come in who are women and maybe some of their concerns, it helps you as you go on. So it's again understanding that all these strategies support business growth internally and externally as well. Yeah.
Absolutely, Monica. And you've reminded me of something, and putting this specific aspect within our job descriptions, right? At AVPA, we also work with the MasterCard Foundation Associate Program, many of which are colleagues on this call today. And we had to make a purposeful decision to understand that, 1, we don't have enough women within our organization, and 2, representation from across the continent, right? So we made active steps within looking at our strategy, how we're going about our hiring process, to ensure that not only does it become diverse, but we also are attractive to these women who want to join in impact investment organizations, but often feel intimidated when they read a job description from applying. So thank you for that reminder. And I wanted to talk, Monica, about your other experience with the Africa Development Bank. You sit on the advisory board of the bank's Affirmative Finance Action for Women in Africa. And we know that you're actively working to close the financing gap for women entrepreneurs, contributing to closing the SDG gap as well. Can you tell us some innovative finance models or approaches that you may have seen in your experience that are truly making a catalytic difference for women-led businesses on the continent?
So thanks. I've really enjoyed my time with AVPA actually, because it's really, 1, leveraging the data they've been collecting across the continent. leveraging a lot of their own experiences using the various instruments, the various financing instruments they have available to them, and also recognizing some of their own shortcomings, because obviously they have been unable to support as many women-run businesses doing what they have always done. So AVPA has come up because of a real renewed thinking. And I think the first thing they realize is that finance definitely is the big question in the room. And Lelemba and Jenny have talked about it, that not all types of financing will fit for women. What we're seeing a lot of is discussions around de-risking women-run businesses. How do you do that? There's now a discussion around working with some of the banks here and guaranteeing some of the loans that they're given and seeing how those work. I think in some cases it's worked very well. In some cases there's still some work to be done. But I think it's a lot about understanding what is needed, what currencies are needed as well, because we see a lot of the funds that are available are financing actually in foreign currency, in US dollar. Very difficult for women-run businesses who have their only source of income is a local currency. How then do you support a woman who just needs a local currency, but is being offered a US dollar currency loan or an investment? How do we balance that, right? So some of these things have been, I think the questions are still out there. I think there's a lot of discussion now about local currency instruments, working with central banks around the continent around how possible that will be for women. The second one is around technical support and assistance, which is really important. Is not enough as being, we need a lot more of this. We used to see a lot of it come out and it's being supported by USAID, FCDO as well, around how to support things around business planning, being investor ready. And these things still are very necessary. What kind of, where do you get your support around? How do you buy equipment for expansion? How do you enter new markets? How do you create linkages and things of that nature? And women just do require that a little bit more hand-holding. So technical assistance has been very important. Under AVPA, this is some of the things they have been doing as well. And the last one, which is actually something which is quite unique for African Development Bank, is really questioning the enabling environment. I think I'm very fortunate in Zambia where as a woman-run business, I haven't had to require my husband or my brother to sign off on a loan. There are African countries where that is still a requirement. And it's now going through, working with a lot of the countries and saying, these pieces of legislation are actually hindering more women businesses growing or scaling, or actually any business in any sector, right? So I'm really working with them to say, how can we change this legislation, understanding the impact of some of this negative legislation on the growth of the economies as a whole. And I think it's an important piece of work. It still is. I know the World Bank also continues to do this sort of work as well. But it is a really important piece of work, and studies need to continue to happen so that people can see why certain legislation actually hinders growth, particularly for women.
Thank you, Monica, and for that important reminder that as diverse and lovely as our continent is, there are still some cultural barriers on women accessing finance, which brings me to our next speaker, Kate Perkins from BII. Monica gave some examples of, how not only are these barriers, but how investors can overcome them. So, Kate, with your experience or with the British International Investment, what does BII look for when assessing a prospective investee on gender inclusion, especially in your African investments and markets? Are there any practical resources that investors can use?
Yeah, no, thank you. And it's been so interesting hearing from all of the other panelists. So thank you for having me. And maybe just for those of you who don't know who BII is, we were formerly called CDC. We're the UK Development Finance Institution, established back in 1948. I think actually the oldest DFI in the world. And we invest patient, flexible capital across kind of a range of products, debt, equity, and intermediated products as well, to support private sector growth and innovation across Africa and Asia. Currently, we've got about 1,500 businesses in our portfolio and assets of about $10 billion. So reasonably large in the scheme of things. So when we first launched our gender finance strategy, this was back in 2018, we set out to close gender gaps in 4 different ways. So firstly, intentionally investing in businesses that already support women. So they might create quality jobs for women or increase access to products and services. And this is what Jenny was talking about when she talked about the 2X challenge. And I can come into that in a bit more detail in terms of our assessment in a minute. Secondly, we partner with our portfolio companies to improve gender equality. So that might be investees that aren't 2X qualified when we first invest, but we will help them create targets. We can work on gender action plans. We can provide technical assistance, as was already mentioned, and help them improve gender actions in their businesses and their business practices. Thirdly, we prioritize women in our investment structures. So that might be through innovative financing mechanisms such as directed lending or impact-linked incentives. And as Monica was saying, we're working actually with some of our banks to do things like gender bonds, which is quite exciting at the moment, and provide more local currency solutions. And that helps provide action towards more kind of intentional gender outcomes. And then lastly, we kind of champion the growth of gender lens investing to bring the wider industry along with us. So we collaborate with other DFIs, we provide kind of knowledge sharing, thought leadership pieces, training with our fund managers, and we try to champion industry bodies, so things like 2X Global, but also Boardroom Africa, which some of you might have heard of, to get more women onto board. That's a bit of a background on who we are and what we do. But in terms of our assessment, so as mentioned, we are we do the 2X. We're members of the 2X Challenge, so we're a co-founder actually, and we played a leading role when this was launched back in 2018 at the G7 Summit. And this really now is kind of a pivotal initiative dedicated to promoting investments that actively contribute to gender equality. So it's become really an industry standard, I'd say, for gender lens investing. To date, it's mobilized over $33 billion. Within BII, since 2018, we've actually put $2 billion in investment towards 2X qualified investees. And we've actually got a target to for 25% of all new commitments every year to be 2X certified as well. So we really see that as kind of translating as a signal to the market that this is a really important investment priority for us under our inclusion strategy. And Jenny mentioned it before, but there's 6 different criteria. I can go through those again, but actually it might be useful to, if anyone's interested in it, you can go onto the 2X website, and that has got a reference guide as well, which will give you all the detail around the different criteria and what's included within that. There are, as they said, several different ones, but also some criteria around ESG as well, which is relatively new, but I think that's really important in terms of things like safeguarding being included into our investment processes. And for us as a DFI, it's not just around kind of ticking a box and meeting the thresholds. It's also about companies who are intentional about this. So again, not a tick box exercise, but say a company has a certain threshold of female employees. You know, you don't just add women and stir. It's also about kind of companies that have high quality jobs for women. They're thinking through gender smart practices in their recruitment and their retention. They're implementing supportive workplace policies. So we've seen kind of creches, etc., being implemented in some of our investees, and maternity pay, so enhanced maternity pay, flexible working, etc. It's also really important when companies have systems in place. So we've talked a bit, I think Monica mentioned it, around the kind of reporting and the data measurement. So are companies collecting data? Are they regularly collecting data? Do they have metrics? And this provides kind of learning opportunities and baselines for them, but also asks for improvement, and also helps highlight kind of gender-related issues within the business and those gaps that we can then kind of support them on during the lifetime of the investment. So maybe I'll stop there, but you know, as I said, I think there's some really helpful guides both on the 2X website, but also if you look on the BII website as well, we've got a gender toolkit, particularly aimed at fund managers, but there's some really useful advice there around kind of implementing a gender strategy at your firm or portfolio level, and then kind of sector profiles as well and case studies. So hopefully you can find that useful, and I can put the link in the chat as well.
Thanks so much, Kate. And it is very useful. Please do put it in the chat. And not only just for investors, but as well, you know, investees, entrepreneurs looking to align, like Lelemba had mentioned earlier, with investors and ensure that they are investor ready, you know, debunking the argument that women are not investor ready and therefore are not able to receive large amounts of capital. Happy to hear BII is making such large investments towards driving this impact on the continent. And so with that being said, Kate, I wanted to understand some of the results from companies that have embraced inclusion. You know, we have some private sector, we have some other DFIs, some high net worth individuals, angel investors that are interested in saying, well, how do I know what the results will be? Have there been any practical examples shared in the ecosystem? And can you talk more about?
Yeah, of course, very happy to. And I think Monica is making a good point about this now. It's just really understanding the business case for gender in companies. So I think lots of our portfolio companies now are realizing that it's not only the right thing to do, but it's also a good business sense. So I think evidence has shown that gender smart investment strategies can help grow a company's competitiveness, solidify its supply base, improve its human capital, and really unlock those opportunities for increased profit, growth, innovation. I think there's some stats out there that like 40% of entrepreneurs around the world are women, and we control, I think, $15 trillion in global consumer spending. So ignoring them really is leaving money on the table for businesses. And so we actually published a report late last year, which was called Lessons from 6 Years of Investing in Women. And there's lots of really interesting examples for that in terms of what we've seen within our portfolio. Some which have been lessons learned, and also some, as I said, some really great examples as well of where there's been impact. But maybe I'll just highlight a couple from that. So firstly, Trade Depot in Nigeria. This provides a platform that connects informal retailers to kind of convenient, consistent access to goods and financial services. So things like digital wallets and lines of credit. And 85% of those retailers in their portfolio that access credit are actually women. So they ran a survey and found of over 200 users, women were more likely than men to say the platform has helped them. And 92% of female retailers said Trade Depot had improved their quality of life. And a lot of this, when we kind of dug deeper, was around to the fact that Trade Depot enabled female retailers to operate their businesses in a way that suited them. It was, as I said, convenient access to credit and goods. It allowed them to fit work around their childcare and other responsibilities as well. And then another example, which is more at the business level, employee level, is Sun King. So again, you might have heard of this one. It's a global leader, manufacturer and distributor as pay-as-you-go off-grid solar energy products in Africa. So women already represent the majority of their customers and employees, which is actually great compared to kind of the sector itself. But we did see there was kind of significant disparity in progression of women to mid-management roles. So going back to that point about kind of dissonance and really digging into the employee numbers. And so we co-funded a program with Norfund, so one of the other DFIs, under technical assistance. And this supported women in mid-manager sales positions via peer learning circles, so learning from their other cohorts, and develops an e-training module as well, and mentorship for junior female sales agents. So this really helped the women to kind of increase their sense of confidence, also increase communicating among colleagues and that kind of knowledge sharing, and it really helped them develop their kind of foundational technical skills as well. So we saw a lot of positive impact from that.
Thank you for sharing that, Kate, and that this information is also accessible to guide other investors who may not know how to start this journey and how to perhaps measure success. And with that being said, colleagues, I've done a lot of talking, and I really also wanted to give a chance to our audience in the room. Some of you have been able to pop questions, but if you would like, please feel free to unmute your microphone, or if you just want to pop it in the chat and ask the panel some questions. So I will give a few seconds. Anyone going? We have an expert panel here, so please do take advantage. It's not often that we have them gathered all here in one place. But if not, and this, I think we can start with you, Kate. Oh, Mary, yeah, we can go to you, Mary. Go ahead.
Good afternoon, everyone. Can you see and hear me clearly, please?
Hi, Mary. Can you just speak a bit louder? Your volume is very low.
Is it better now? Can you hear me
Perfect.
clearly?
Yes.
Okay, great. Thank you so much for organizing this webinar. And thank you to all the speakers on the panel. Very, very insightful. I feel very privileged to be here because I am just starting a PhD at Henley Business School, University of Reading, on the subject of female entrepreneurship in high growth enterprises. And so I've done some work in Nigeria, and I've also done some work in the UK context. And I was really pleased to hear about BBI's work, across the two continents. And so my question to Kate and to anyone on the panel as well is, what have been some of your experiences across the context with women in business, especially in high growth enterprises? What has been your experiences around enablers, for better business environment for women in business across this context, challenges and biases when it comes to investing in women? I mean, there are lots of work out there, but it would be good, since I have the opportunity to speak directly, to hear what some of your experiences have been like. And for Monica as well, you touched on something that's really, really interesting around retention. And that's some of the things that we're seeing as well. There's a lot of support helping women to get started, but somewhere along the line, there's that drop off. How can we support and close that gap? Is there anything that investors should pay attention to help reduce that gap? But yeah, thank you so much for the opportunity to just jump in. Thank you.
Thank you, Mary. Perhaps we can also take Paddy, and then we can go back to the panel. Paddy, go ahead.
Thank you, and very nice to be able to share in and listen in. I think it's a really important topic when we talk about social impact across Africa. And I also just wanted to maybe connect it to the last speaker. I wrote a bit in the chat in terms of retention. And actually for me, it's more sort of how do you sustain the interest? Monica, I speak also from a Zambian perspective, not just because I come from Zambia, but knowing that there's been a lot of affirmative action, for instance, not just within private sector, not seeing it so much coming more visible, but also from the public sector to want to see a more focus for financial inclusion, for instance, for women, and how you kind of see this really trickling down from that government perspective. And then maybe for all the panelists, it's really like an out of the question. I am living in the diaspora, Zambian living in the diaspora, and often in the diaspora, we began to make this connection between diaspora as agents of development, but a lot of diaspora that are also involved in social impact, that are also involved in the private sector. So I just want to get to get a take from the various panelists, and this could apply to your own diaspora. Where do you really see the potential in how diaspora could really be useful for unlocking capital? And I'm not talking remittances, I'm really talking about investment. And thanks again for a great moderation. I'll stop here.
Thank you so much, Paddy. Why don't we start with Kate, Monica, Jenny, then Lelemba.
Yeah, maybe I can just touch upon the first question in terms of just the regional aspects. And it's one of the things I find really interesting about my job, actually working across two different regions and seeing some of the similarities, but also the differences as well, and what we can learn from different regions. So I think some of the things tend to be which cause great differences around the regulatory environment. So I think you've all seen, obviously, in East Africa, there's such a big growth in mobile money. We find that much more of a challenge in some of our Asian markets as well, where the regulations just aren't so inclusive and open to some of those innovations. So we've been really kind of working with regulators and speaking to them when we do our trips to understand clearly where they are on that journey in terms of things like mobile money sandboxes, fintech sandboxes, and how they're trying to implement it. Because as I mentioned earlier, with kind of players like Trade Depot, that kind of convenience is so important for women when they are juggling lots of other things at once. So I think that's one of the big differences we see. I think secondly, obviously, cultural aspects play a big role as well. In some of our markets, it is just, challenging across a lot of African markets, but then we see places like Pakistan, where it is just very difficult for women culturally, both in employment, but also in terms of kind of accessing finance. So we've been working with some of the banks like HBL, for example, and helping them to introduce through a gender action plan women products, but also in getting more women into employment, which has risen from 11% to 22% over the time we've invested, which still seems low, again, compared to some of the African markets we've seen. But this is why it's so important to understand the baseline and what is achievable over the lifetime of that investment. So yeah, I'd say those are the two biggest things from a cultural perspective. Sonny made the point earlier, actually, in terms of just kind of bringing communities along. So again, I think a good example of what we've seen in some of our Asian investments is where we've kind of, it's not just been about getting kind of women into the workplace, but also kind of making sure that their husbands, their families are supportive as well. So we see that particularly with some of the loan officers in Pakistan again. So yeah, some interesting examples there and things that we can learn from different countries.
Thank you for that, Kate. Monica?
Yeah, let me try to respond to the issue about retention. I think speaking from the Java Foods perspective, what we did actually is, first of all, did a survey just to really understand where we were. And we asked completely anonymous, digital, and just asked our team what was some of the important things for them, so that we could actually really focus our minds on trying to create this kind of environment where it was a great place for women to work and grow. And what we found was really important was not just about getting the job, applying and getting the job and getting a contract, but was there a clear, transparent way in which we were looking at performance? Did they see a long future? Did they see that from this position they could see that they can climb up the ladder? They knew it was very clear to them if they perform where they're going. Was there support with respect to education, furthering themselves? If they wanted to be an accountant or move out into another department, were we able to provide that support? And the more we were able to put into place those sorts of policies within the workplace, the more women wanted to work with us and stayed with us. I think it's really important, and particularly on performance management, that it's very clear and transparent, that you set your KPIs up front. People know how they're being assessed, and actually women like it. I mean, well, everybody likes it, of course, but I think we found the results have been very clear for us that our team, we are actually, Java is 46% women, of which 50% are at management level, of course helped by a woman founder, but it's not always automatic, I've got to say that. But it really is understanding the environment which you work in, understanding your shortcomings. How can you improve on them? It's a journey. It's not a sprint, and it's things that you have to continue to build on, and if necessary, seek support. And I think there's a lot of support out there that can help businesses grow, deal with things around retention, attracting, putting into place the right policies, and also just being and understanding these matrices. Yeah, thank you.
Thanks, Monica, for that insight. Jenny? Nothing from your side. Lelemba?
Cool.
Sorry, I do, Mateo. I was struggling to unmute. But yeah, I just wanted to say, completely agree with Monica on the solutions for gender retention, but also just found that the ability to potentially work remotely for a few days a week also has made a difference to some of the companies in our portfolio. And although we do know the importance of obviously having that in-person contact, super important, but I think that's one of the things. And then also offering like a maternity or a nursing room or something like that as well is also super useful. And we found that really important, along with all the other great suggestions, Monica, on that side. On the diaspora side, Patty, I think the diaspora are super important, I think, and should be even considered really importantly in the role in Africa going forward, because the diaspora have disposable income and understand the risks that are associated with investing in Africa, and actually don't even perceive it as a risk. I think they see it as the opportunity. And so I think that is really important. There are a few people that do address that. I'd be happy to take that discussion with you offline as well, and anybody else that's interested. But I think there's a huge role that the diaspora can play, not only in the private markets, but I think also in the public markets. And so that's something I'm very passionate about.
Thank
Sorry,
you for
Lelemba,
sharing.
over to you.
Thank you for sharing, Jenny. And yeah, you're absolutely right in terms of the diaspora, as Paddy mentioned, I know Altri works on this as well, and also AVPA, we provide strategic advice for this specific thing you mentioned, Paddy, impact investing. So do connect and we'll be happy to discuss more. Lelemba, over to you.
Yeah. So to Mary's question, I guess, around some of the observations. So my PhD was looking at the intersection of gender, race, and entrepreneurial finance. And interestingly, one of the factors that particularly affect women in fast-growing industries came out to be the perception of non-belonging. If you take a lot of the fast-growing industries like technology, for example, it was traditionally male and white, still is. Other sectors like energy, traditionally male and white. And so, first of all, it's just that perception that they don't belong that become a barrier for establishing themselves, let alone having them access financing. And so sometimes it's just not the environmental factors or even access to financing. It's also psychological things like, do you even need to be in this space? There's a great article that I can share with you. It's got a very long title, but it's something like, I was distracted by her entering the room. So the title is already quite, it agitates you, but that is literally the psychological effects of somebody not expecting somebody who looks a particular way getting into the room, and therefore the hostility that they tend to face within a lot of these environments. There's been evidence of practices such as like, just front a white man quickly and you'll get access, right? And so those are issues that you might not be thinking about proactively as issues, but belonging as one area of interest, biases, hostility, all of that stuff. And so when you are looking at your studies, I call myself a pracademic because I straddle academia and practice. When you're thinking about that, you have to just think a little bit wider and not tie yourself to just like environmental factors. To Paddy's question on the diaspora is everything, Paddy. My first pilot fund was, like I said, I was an entrepreneur, so I exited with a bit of money, but I only had so much money. And so I reached out to a lot of my friends in the diaspora and said, let's just pilot something and see if this is something that's workable before I commit to a whole fundraise. We raised $100,000. We did a lot of experimental instruments. We did revenue share. We did some equity, and we did some debt as well. And this caught the interest of the Shell Foundation in the UK that topped us up. And this is really what created my initial track record for when I then went out to raise the first fund. And so there is an important role that the diaspora can play. Like Jenny said, you've got access to money, but you also understand the unique context. And it's less of an educational process for me saying like, there's an opportunity in this space with you, Paddy, than I might have somebody who's completely got European context. And so that lessens the journey for us. But that piece on enabling us to create these track record investments is super, super critical. And so thankfully, there's a lot of angel groups that are springing up across the board on the continent. Zambia has one called ZBAN. So it depends on what you're interested in investing in. So thinking through the areas that you like, because from an angel perspective, you get to not just give money, but you can also get some access and involvement into supporting some of the businesses directly. And so think about the interest areas that you might have and therefore which networks to link yourself into. So it's a very, very important piece there.
Thank you, Lelemba. I think you've hit the nail on the head and very practical examples of how you have utilized the diaspora to drive funding for social impact on the continent. Leah, you have your hand raised.
Hi, everyone. Yes, sorry. I just wanted to kind of come back to this point of the perception of non-belonging, and also back to this point of kind of women being the drivers of investing back into their communities. Um, I'm speaking on behalf of the Pharaoh Foundation, and one of the things that we try and work on is basically reducing the barriers to employment that people face. And one of these things that we do is kind of vocational training to bridge a skills gap in developing economies in East Africa. This tends to be kind of in male-dominated industries, plumbing, electricity, construction. And so when we are trying to encourage women to move into these industries and encourage them that they, in fact, do belong in these spaces and that there is space for them there, we are finding that this is kind of a problem where they feel like, yeah, that they don't belong in these industries. And I feel like perhaps if someone had an example of a case where employing more women resulted in kind of a better impact because women are kind of going back and investing this into their community, I feel like this could be a hugely encouraging factor in kind of motivating women to take that scary step into these industries.
Thank you, Leah. Any panelist would like to tackle that? Go ahead.
Maybe I can give an example. So actually it's good timing because we actually have a case study coming out on this. So we're about to release a case study on Kenhardt Solar PV. So it's a solar PV site in South Africa, where they actually hired 500 female construction workers. And so that was 13% of the workforce. And then not only that, I think female SMEs were something like 48% or so of overall subcontractors as well. And so this case study, I don't want to give too much of a spoiler, but the women's participation in the workforce did increase productivity. It also led to greater reliability, according to the company, and less absenteeism as well. And it showed an overall kind of increase in positive workforce dynamics. And obviously this really challenged stereotypes as well. So I think this is just a really great example that we're going to show and highlight for the construction industry, and also try and, make sure that has some knock-on effects for the rest of our infrastructure investees as well. We've also got an investee called InfraCredit in Nigeria as well. And they have a target for getting 50% of their graduate women from STEM industries. So, we're trying to kind of showcase some of these examples, and as you say, have that kind of then knock-on effect to get more women involved in these more challenging sectors. I hope that answers your question, but others might have some other examples.
Thank you, Kate. And I want to challenge you. How can we access this report once it is released? AVPA, we can share it within this system ecosystem after this webinar. And once it's ready, can you make it available?
Yeah, happy to. That'd be great.
Awesome. Thank you for that commitment. Lelemba, over to you.
Yeah, I think happy to connect with Leah separately for a number of case studies. So yeah.
Thank you so much for that. And we have a question for you, Monica. How does support from organizations like Partners in Food Solutions position women to attract funding?
Oh, okay, that's a great one. Partners in Food Solution actually helps with technical support for food processing businesses across the continent, and particularly actually in about 6 or 7 key markets. And what they do is, with the support of US food companies, you're able to leverage expertise that helps African food processors. So for instance, if a company needs support on quality control or certification, or particularly support on what piece of equipment to buy, that's what Partners in Food Solutions supports the company with. It doesn't necessarily help raise financing, but I think it helps you with technical support. So they're a little bit different from like the investors you're speaking to today. Yeah.
Thank you.
Monica, maybe I can just jump in there as well and just say they've been a great partner for some of the companies we've invested in as well, just helping with food certification, GAP certification. So the ESS, the foods, the international iOS standards as well, and even organic certification. So that really just helps. So the organic certification actually worked extremely well because it gave the company that they provided it to a 30% price increase. So almost instantaneously. So they have been a brilliant partner in the work that we've done as well, supporting many of the companies in our pipeline and our portfolio. But again, they don't give access to capital, but I think they provide that element of investor readiness, which I think is really useful to see.
Thank you for that, Jenny. And colleagues, last question as we wrap up the end of our conversation. This one is towards you, Lelemba. And in this, feel free to also give your closing, and then we'll go back to Jenny, Monica, and then Kate. So Lelemba, for you, this is a question in the chat. How can we tailor impact approaches to meet local contexts?
That's an interesting one. I think there has to be a healthy balance between meeting local context and having it more applicable on the global scale. And so I think for showcasing purposes, you want to be aligned as much as possible with the mainstream global metrics, everything around your SDGs to some of the metrics that Jenny shared, for example, with for GEM with MEDA, because this just helps you to showcase to potential stakeholders, whether this is investors or even people who might be interested in working in your organization, that you are following a global standard and that you are measuring what everybody else is measuring. For a local context, it's important to note what are the nuances before we even start, right? What differentiates what everybody else is doing from what would be critical in your particular market? And then try to start surfacing these slowly. And if they're impactful enough, other people might get on the bandwagon and start to adopt them as well. But being quite deliberate about aligning with global standards, just so that we're all building towards the same momentum as we build the local contextualized impact matrix is really important. So I'd say we need to balance a little bit of both. Yeah.
Thank you for
and
that.
my closing remarks, thank you, everybody. This has been a fantastic conversation and great panel. Good job to the AVPA team.
Thank you, Lelemba. Jenny, over to you.
So thank you to the AVPA team for putting this together. Really fantastic panel. Just loved every minute of it. Fantastic conversation. I think there's so much to be done. Women need dedicated pools of capital to drive and ensure that they have a seat at every table. So this is really important work. It makes business and economic sense, and we need to see more of it. And I think it's actually up to us to show the way forward and to highlight the heroines, because actually it's the Monicas of the world that are actually the real heroes of our stories. So keep up the great work, Monica. And thank you, AVPA team.
Monica, over to you.
Thank you for having me, actually. As I said, I felt I was the odd one out when I was invited. So glad to have been able to share some insights from obviously a personal perspective about, with Java, and really, really great progress, I've got to say. As I said, 2012, there wasn't anything. And now to see how, so many more funds, so many women are raising funds now, which are really focused on women running our own businesses. And definitely, I think what we want to do is have women in every sector across the continent. And yeah, thank you for having me. Yeah.
Thank you so much, Monica. And last but not least, Kate.
No, I echo everyone's thoughts on the panel. And again, thank you for having me. I think, there's a lot going on in the world at the moment, and it feels very uncertain, sometimes a little bit depressing as well. But I think there's also a lot of opportunities, and we're just really looking forward to accelerating our impact for women in the future. And we can't do this alone. We all work together. Hopefully we can make that impact even greater.
Thank you, Kate. And you've said it exactly. We cannot do this alone, ladies and gentlemen. Colleagues, thank you so much for availing your time, your questions, your opinions. I would like to really appreciate my panelists as well. Thank you for your commitment to sharing such great, not only strategies, but really concrete steps that investors and entrepreneurs can take towards gender smart investing. I do want to encourage us to keep not just the conversation going, but the learning, the applying, and let's also tell these impactful stories to enhance, right? And if you'd like to keep in touch, we've shared AVPA's details, and we're going to be unpacking more of this in our conference in Nairobi at the end of the year, 3rd to 5th November. Details up here. So if you'd like to run a session on gender smart investing, please do get in touch. And throughout the year, colleagues, we are growing this community of practice, not just to discuss, but to learn and to push the needle forward. So I also want to send a reminder to our panelists who committed to share some reports, some which are ready now, some which will be ready after. I know Solelemba is going to have some follow-up conversations. So colleagues, let's keep this moving forward. And again, thank you, everyone. Have a good rest of your day. Bye-bye.